In this video, I'm going to show you 20 mistakes that people make on their self-employment tax return and pay too much tax, not just in this year, but also in the future as well. So go check it out. Hi there guys, so what we're going to be talking about today is the self-employment tax return and the mistakes that people commonly do on the self-employment tax return and therefore pay too much tax. So let's crack on with this video because there's quite a bit of content I want you to study through. You may want to stop, rewind this video several times over because I'm going to give you some links as well that I'm going to share on my entire screen here so that you can understand some of the things that you might want to be researching beyond this video. Okay, so hopefully you can see my my entire website here. The self-employment tax return is short here, so the first mistake people make, and I've got to make a mark for one, is the fact that they use the short versus the long details. So you might want to just investigate whether a short version is suitable or if you need a long tax return for self-employment. But for this video, we are just going to focus on the shortened version. The first mistake I see people make is not understanding the difference between accruals and cash basis. This is not an accounting training session. You'll be pleased to know. I mean, that's just so boring. But what you do need to understand is what accruals and cash basis is. So very, very quickly, but you might want to do your own research. That's number research one. Is whether you use cash basis as in money as physically coming in and physically going out. That in brief terms is cash basis. Accruals basis is whereby you send an invoice out to the customer hasn't paid, but you still account for it because that's the accruals basis. The same applies for costs as well. So number two is not using the accruals or cash basis correctly. So that's what you should be looking at. There are some details as it said here. Just put cash basis in Google and it will come up on this particular website. I'm not going to go into too much detail in here. It gives you some ideas of what you can do it for, whether it's suitable for you or not, and gives you some good examples. So HMRC's website is very good for that side of things. So cash and accruals basis, yeah, are you using the right one? There are ways, just coming back to that, if you use accruals basis, sometimes, just sometimes, if you are buying lots of stuff, so let's say you're a shop or you're selling products, you might be buying in more goods and services, but you need to be careful because the kind of way you account for cost of goods sold could be a little bit tricky, and that's where you need to use things like Xero QuickBooks, that it will do all that accounting for you. So that's another classic example here actually, is not using a suitable bookkeeping service to do your bookkeeping to make your life easier. The next stage I would say is going through your tax return. I'm going to miss out the details about your business. That's not something I really want to kind of focus on. But you do need to bear in mind the dates at the top. So if you started your business, I would typically say that most people on self-employment doing a tax return would use the period from the 6th of April to the following 5th of April, okay? You could use different dates if you would like to. I wouldn't bother. If I was you, I would just stick to the kind of dates that are shown there. Number 4 in terms of mistakes is VAT. So once you go over £85,000, you need to be VAT registered as it shows you here. So I'm just going to highlight that a bit higher for you. And again, this page is just HMRC's VAT registration page, so you can have a look at that yourself. But I've highlighted for you there in terms of the VAT threshold is £85,000. Once you go over that amount, you should be registered for VAT. What does that mean? Well, you now need to charge 20% on your goods and services that you send out to your customers. The big mistake there is that sometimes people should keep their turnover below a certain amount, maybe let's say 80,000, so that they don't have to charge 20% to their customers. If you sell a product or a service for £100, then you have to charge £20 VAT. So I've just got something in mind. Now, if your customer cannot claim that back, all of a sudden you are more expensive than anyone else. So actually, are you better to do less business, make more margin, and have a turnover of £80,000 instead? Something to consider. And that's a big mistake for me in that regard. The other side to this is flat rate scheme. So this is in terms of looking at your VAT, if you need to register, do you know that you could actually make money on the flat rate scheme? The flat rate scheme is also easier. What does flat rate scheme mean? Well, HMRC, depending on your business industry, will say to you, well, hey, what we will give you is a flat rate scheme of 10.5%. So you might charge your customers 20%, but you would pay to HMRC 10.5 of your total turnover. Okay, so your total turnover is the number that you would use, and you would pay 10.5% over to HMRC. The advantage of that is the fact that you have less administration, it's easy to calculate, and away it goes. But the disadvantages of that is that you cannot claim back VAT on your goods and services that you buy. So that could be a stickler. So you might want to do some calculations on that. And that is why I have deemed this to be a mistake, because some people just don't understand VAT well enough. And I'm going to give that another point for mistakes. Point 5 is the fact that they don't use flat rate or normal VAT schemes. Really important you do some more gemming up on that. It's too long of a video to go through that on this one. Back to the self-employment page. Okay, so your turnover, it needs to be shown in this book here. And then we've got any other business income, including coronavirus support payments, such as CJRS, but not SEISS. So the coronavirus obviously gave a number of grants and funds to people, and people applied for it. What you do need to remember is that HMRC do have a track of what payments have been made to people. So trying to just mitigate this or to avoid putting this number on is a mistake, and people will be penalized. And if it's seen as a fraudulent claim of not putting the money in that you have actually genuinely got from HMRC, then they could give you penalties, especially if they think it's fraud. So be very careful of going through your bank statements, going through any documentation, correspondence you have with HMRC to see how much money you've had, and then put the amount in there. Trading income allowance, I'm just going to ignore that point for now and move on to the allowable business expenses. Goods sold and sale. There's no mistakes I can see on here. This is just the items that you use in your business. Typically, if you're selling products, this box will have a higher number than if you're selling services. For example, if you're selling services, you might employ other people, but that won't go in here necessarily unless you use third-party suppliers. Car, van, travel expenses. This is a classic example here whereby people just don't understand. And this is point number 6 actually. It is mistakes. What people should be doing here is putting in travel. Now there are 2 ways that you can do travel. You can have a car or a van, and you can expense that cost of that car and the van into your self-employment business activities. And you would have to take an apportionment here of saying, well, how much do I use of personal versus business? So if you are using let's say that you work from home and you have a car or a van, but it pretty much sits on the driveway, and you just move your kids to school and back, and you come back to work and don't move anywhere, well, then your business apportionment is going to be very low. Conversely, you could use mileage. Okay, so mileage is a simplified way of doing things. So if you don't want to go through apportionment of, well, how much is my car really going to be costing me? What's my insurance? What's my maintenance? What's my petrol? And trying to add up all that and then trying to make an apportionment is tricky for a lot of people. But creating a mileage logbook may be easier, and it may actually save you more tax than trying to apportion your costs anyway. So do both and then work out which one you save tax most on. The mileage rate, which is I always find fascinating, is that there are 2 different types of rates, and there are 3 different categories. The first rate is based on your mileage up to 10,000 miles, and then the second rate is beyond 10,000 miles. Now you have one here for cars, which I'm going to highlight just here for you. So this is whereby you could, for the first 10,000 miles, you can claim 45 pence per mile, which is very generous actually, and therefore could be better for you than claiming your actual costs. Once you go over 10,000 miles, then it does drop to 25 pence. Typically, we do not see many people going over 10,000 miles, but if you did do 10,000 miles, let's say exact, then you could be putting through your books at 4,500. The mistake that I see people make, which is mistake number 7, is the fact that they don't keep a logbook accurate enough, and they just use a number out there, which is, let's say, 10,000 miles. Well, HMRC are going to pick that up at some point and ask you for a logbook, and therefore you won't be able to justify that. And they'll just take the number out and charge you tax, penalties, interest. Not a good sign. What you really should be using is an app. Everyone has a mobile device with them. You can easily put an app in your car with a start and finish. And with these car mileage apps are very good because it will break it out by tax year. So you can press start on your part of your business journey, and it will take you to journey, and just press stop and it will record the journey itself. So that acts as a brilliant logbook for you rather than creating a manual book. If you drive a motorcycle, then the mileage rates do decrease to 24 pence per mile, and they don't actually change. As you can see there, they stay static. So 24 pence per mile for a motorcycle, irrespective of how many miles you do. If you are a nuts freak, then I'm not, but I do admire those people that are. When it comes to, I do go to the gym. Before you think I'm lazy, I'm not lazy. It's just I don't like bikes. But you could claim 20 pence per mile for a bicycle, and that doesn't change either. But that's fascinating, isn't it? So you can keep fit and still claim mileage against your business activities. And I do see a lot of people ride bikes, especially around London, where it's actually easy to get around. So if you're traveling around, people make this mistake because they do not claim mileage on their bicycle, which is really crazy. Now let's imagine that you said, well, actually this mileage is good, but what can I compare it to? What's my charges of my car and van? Well, there's a couple of things that you should be doing here. First of all, there's the running of the car. So insurances, you might have maintenance, as I said before, any kind of stuff that goes on to running, petrol receipts, all those kind of things, any damage that you have to the car, that can also be included. And what you would say is, let's say that your cost for running that car is £2,000 and use it for 50% of business and 50% is personal, then £1,000 of that would go against your self-employment tax return. But it doesn't stop there. And this is mistake number, I'm going to say 8 here, whereby people do not use capital allowances. Well, what is capital allowances? Well, this covers cars and other things. And I've just gone into this thing here so you can have a look at this yourself. Google HMRC capital allowances, really, really good. You can claim capital allowances on all of this kind of stuff here, as it says here, look at this. So you can claim it on equipment. So what's equipment for a business owner? Well, if you're selling products, you might have shelving, you might have cabinetry, you might have display units. Those may be capital allowances that you can claim. You also have machinery if you're producing anything. If you've got services, typically you may not have very much. But there are some things I'll talk about later on in terms of this thing that's in front of me, a laptop. How can I claim that? I'll talk about that in a second. But as I mentioned before about comparing mileage, you can claim capital allowances against business vehicles such as cars. So depending on the rate of capital allowances, again, do your research. It's too long of a video if I went into detail here, but you can claim the cost of that car or van against your business activities. And that's something that people miss off quite a lot, and it's shown in the tax return later on. But I wanted to tie in travel and mileage against capital allowances and business apportionment of your car or van costs against your self-employment business. I'm not sure. Oh, yes, I have got this for a reason, and it's called something else that you should really look into or speak to your accountant about is annual investment allowance. Because typically, whenever you buy a car or van, people will say, well, how do I apportion this? And this, for me, is mistake number 9, simply because people do not understand annual investment allowance, which means that they could have attributed the full cost of that car. Let's say you got an electric car for £50,000. If you use it solely for business purposes, could you have claimed that £50,000 against your self-employment business activities? That is something that you need to do some research on. Now, the annual investment allowance, by the way, you can, up to the 31st of December, which has been extended, funny enough, is £1 million. So it's going to take quite a lot, really, to have capital allowances to be offset against that. Again, annual investment allowance is capital allowances. They are the one and the same. The difference is annual investment allowance is 100% write-off in the year of acquisition. But if you didn't do that and you've messed things up maybe, then your capital allowances will be attributed over a number of years. So they are one and the same. Annual investment allowance, capital allowances are the same, but you just need to do some calculations on what you could put through your self-employment tax return. Big subject, but please understand it, because people pay far too much tax because they do not claim capital allowances on the things that they buy. They do not claim annual investment allowances on the things they buy to write off against their self-employment tax return. Big mistake. Okay, so I think I've done point 12 to death right now. There are other kind of travel expenses that you can have is trains. And this is a big thing, actually. I'm going to put this as point number 10 now, is keeping receipts. People do not keep their receipts. They buy things like to go on a train or a plane or a ship, whatever you choose to do your business. But they happen to just forget they did the journey, so they haven't kept a good diary management system to say, well, I traveled there, therefore I must have had a receipt. Where the receipt, they don't use Xero QuickBooks to upload their receipts using a scanning device, which again is a costly mistake. If you do not have the receipts, you may not remember you've incurred that cost and you will pay more tax than you should have done. Big mistake right there. Okay, wages, salaries, and other staff costs. So if you employ people, should you pay them cash? And this is now mistake number 11. People, when they employ people, do not understand their responsibilities. So here's a page that you might want to look at. PAY online for employers. If you are going to employ people, you should deduct tax for them. Do not pay them in cash because A, you are potentially breaking the law by tax evasion for that person, which is then becoming your responsibility. And the other side to that is that you do not have the expense in your accounts. Who wins? The person you're paying cash to, because you cannot get the tax write-off. So that's a real bad mistake right there. But the PAYE is a big thing. So if you haven't done so already, you employ people, make sure you do that. The other mistake, which I'm going to call mistake number 12 for self-employed people, is HR. People do not get help when it comes to recruitment. People do not get help to write an employment contract. It's pretty much a fag packet job sometimes. And that's really going to be a mistake, especially if that relationship sours and then they take you to ACAS, which is the employer and employee support line. And then all of a sudden you're in big trouble because you haven't done things legally. So make sure you do get some support on that. Rent rates, power, insurance costs. So this is typically in your premises, your business premises, and this is now mistake number 13, because you can not claim for your home, for instance, unless you're using one of the rooms, and you can apportion the cost of the rooms, but you can't account for the entire house. So if you've got insurance for the home and you use a room, then you could use an apportionment rate to put the cost against your business. But please don't offset the entire amount. Equally, some people, when they use premises outside of their home, don't always remember to account for the costs of the rent rates, etc. Again, because they don't keep receipts. Repairs, maintenance of property and equipment. So if something breaks, then you should put that cost in there. I don't see really many mistakes going on there. Accountancy, legal, and other professional fees. Typically, well, that would go in there. No real mistakes on there. Interest and bank and credit card financial charges. This is mistake number 14. There is something called HS340, which I'm just going to show you now just to get you to understand this. This is the interest and alternative finance payments eligible for relief. So what I do see a lot of people doing is that they would refinance their home and use the proceeds of that remortgage of their home against their business, but then they don't charge the business the interest. But actually, that is a business expense, and therefore you should be allowed to attribute that to your business. So mistake number 14 is just not accounting for the interest that you've incurred in your business, and therefore paying too much tax. Phone, fax, stationery, and other office costs. Again, pretty standard. Not going to say too much on that. Other allowable business expenses, client entertainment costs are not allowable. Is that a mistake? Yeah, let's put that as a mistake. People do put in there entertainment. What is entertainment cost? Well, if you are taking your spouse out, your children out, and you are going on a business journey, you cannot attribute the cost for that activity if you're going really for not business purposes, but for family reasons. Equally, if you're going to see friends, then that's never going to be a business reason. And I know people push open the envelope to say, well, what happens if I talk about business? Well, talk about something that you might do in the future about Amazon, and then proceeding to have, I don't know, beers, wine, whatever with your friends. Really is pushing it a bit too much, really. So don't try that one. And then you have net profit or net loss. Self-explanatory, not going to talk about that. I've already talked about annual investment allowance, so again, not too concerned about that. Allowance of small business unrelieved expenditure, not going to focus on that. I've really covered off the main essential points here. And other capital allowances, again, I've covered that. Tax structure building allowance, yes, there's some things you should be looking at on that. And again, maybe this is mistake number 16, is whereby people look at an element of the tax structure and business allowance and think, well, actually, I don't even know what that is. I'm just going to avoid it. But actually, the structural allowance could mean that you get 130% write-off of the things you do to your building for an improvement. Did you know 130% is more than the cost of actually what you've incurred, which is a fantastic write-off. But because people don't really understand it, they just avoid it and move on. Such as balancing charges, not going to focus too much on that. Calculating your taxable profits, goods and services for your own use. As I mentioned before, you do have business purposes and personal usage, and you have to take apportionment of that. I'm going to ignore that for now. Self-employment income support grants, again, as I mentioned before, if you have got self-employment, and this is mistake number 17, because self-employment income support is directly a taxable grant that you've been given. So during coronavirus, your business might be shut down. The grant is actually something that the HMRC will say is a taxable income, and therefore you need to put that in your self-employment tax return. I have seen people already many times that have put too little, or even worse, too much in their tax return because they just guess what they think they've got. They've double accounted for one of the grants that they actually received. So it could be a costly mistake. Move over to this side of the screen. So loss brought forward from earlier years and any other loss of business income. I'm going to ignore the box number 30, but box 29 is a big one. When people do their self-employment tax return, sometimes they try and do it rushed. 31st of January, right? If you're waiting to do your tax return until now, you are probably not going to have all the information available to you to be tax efficient. You are going to be rushing. So there's two things here. There's two mistakes here. One is rushing and not getting the things done. And number 19 really of my mistakes that I see people make is that they don't bring forward the loss from last year. So if you have losses accruing from previous years, you should really bring those forward into this tax return because it will help you save tax. And that is ultimately what it's all about. And then you get to all these kind of stuff about losses and profits and so on. The big mistake I want to focus on, which is I'm going to leave it at box number kind of this 20 mistakes, I think, really, is the fact that people pay national insurance. Now, the big question I want you to really answer for yourself, historically you can't do too much about it, but going forward you should be asking the question is, well, should I use a limited company or not? Big question, and I've done a video on that. You might want to research my video channels on that, and I'll put a link at the end of this video so you can have a look at that. But the big thing for you is to think about, well, not only have you got income tax responsibilities, but you've also got this self-employment responsibilities as well. So you've got the Class 2 national insurance, which is over 6,515, and then Class 4 national insurance, sorry, which is over 9,569. This is in addition to the income tax. So you got the £3 a week straight away. So, you know, £100 odd there. And then you've also got this 9% of profits between the 9,569, which is referenced up there, and 50,270. And then any excess over that 50,000 is at 2%. Now, if you think about it, if you are a basic rate taxpayer, which is this is pretty much in between, you are going to be paying 20% basic rate tax, income tax, and then you have this 9% national insurance as well, which is 29%. That's a lot of tax, especially when you think about corporation tax is 19% at this level. So you probably pay more tax than you need to simply because of national insurance. So should you think about using limited company? That's a big question. And I'll leave it there as mistake number 20 is not going through that. So in summary, I want you to go back to this video because not only will it help you do your self-employment tax return this year, but it should really help you to understand, well, how do I become more tax efficient? How do I do some tax planning for next year? So this self-employment is a great way of helping you become tax efficient now, and indeed, more importantly, in the future. All right, guys, so that's the end of this video. So hopefully you found that useful. Until next time, my name is Simon Misiewicz from Optimize Accountants, and I'll see you again very soon.